Good morning, everybody. Hopefully, y'all are having a great Monday. Off to a pretty good start for SPY. Currently, it's up by 0.2%. So, I gave my analysis over on the premium Discord, and some unfortunate news. The free premium trial that was server wide has ended. So, I will be making the open trades on a separate screen over here, but I will be showing y'all the closing trades that I make as we go along. So if you want to join the premium Discord, visit the link that I just pinned, the Discord link. Visit the premium Discord info tab right here. This will give you all the info that you need. So enough on my spiel. Let's get over to my morning update that I gave. So markets are down now 0.2% after, whoops, that's the wrong. So I actually need to look at my weekly watch list. So this is my analysis going into this week. So futures are off to a good start this morning with SPY up 0.02%. And I think this is likely on optimism of inflation coming in good tomorrow. And I've talked about this a couple times on the live streams, comparing producer price index to the consumer price index, because when producers can make goods for less money, you would hope at least that they would pass those savings on to consumers. So if we look at last week's data, let's see, not yesterday's, but last week's. So we'll go the 5th through the 10th, and we'll search for PPI. I think it was released on Friday, but don't quote me there. But if we look at PPI, the year-over-year reading is what I'm paying attention to, not the month-over-month reading, just because that's so volatile. But the year-over-year reading was previously 6.8, and for this month it came in at 6.2. So that's about a 10% drop in terms of the year-over-year PPI reading. This is actually the core PPI reading, but generally I came to the same consensus that inflation for producers came down by 10%. So hopefully we get a 10% savings on the CPI, which is expected to be 7.2 coming out this Tuesday. So let's look at this week's data. So CPI is expected to come in at 7.3 actually. So yesterday I read this was 7.2, but now it's saying 7.3, and last month this came in at 7.7. So assuming that the 10% drop in PPI, or the producer price index, translates to the CPI 1-to-1, there should be a 10% drop from 7.7%. So that would land us with 7% CPI for tomorrow, and this is coming out at 8:30 in the morning. And again, Wall Street expects 7.3%. So the last time that we had such a good report where it was 0.2% below expectations, SPY ended up rallying by something like 4 or 5% that day. So I would expect probably the same thing going into tomorrow, probably around a 4% rally, give or take probably like 1 to 2% just for, volatility. But I do think that CPI is going to lead us up if this is the case. If it comes in at expectations, though, say it comes in at 7.2 or 7.3%, I think that there will be either little to no change, or I think that there is going to be a decent size sell-off because it wasn't to expectations. So the way that I would probably trade this, my confidence is high in CPI coming down below expectations. So I would probably be bullish on this, but I'm sure this is probably already baked into the premiums that you'll see if you're buying like SPY calls ahead of CPI. So let's see if we expect, if everything goes perfect, right? If it comes in at 7%, and we get that 4% rally. Right now, SPY is trading at 394. Let's say we end the day flat somehow. I would imagine that we would end the day a little bit higher than we are right now, but let's say that we end the day flat. At 394, we multiply that by 1.04, and we get 409. So you could do this with a long call option if the prices are good. But the problem is the prices are already likely jacked up because there's a lot of implied volatility because of the CPI coming out tomorrow. So let's check out what we got. So I still have some options open from last week, 1213 called debit spread. So I think this one is going to work out just based on the analysis that I just gave you for CPI. So I'm probably going to take profits on this 1213 expiration 397 398 call debit spread tomorrow. But I do want to look at a new trade, and this is probably just going to be a long call option. And let me actually make it off screen for the premium Discord. But basically my assumption here is that we're going to go up 4% on CPI tomorrow. So basically you would look for a call option with a break even of around, I would say 405 to 410. So you want to give yourself a little bit of a buffer for volatility because tomorrow is going to be a very volatile day. So I would give yourself like 1 to maybe 1.5% buffer for volatility. So you do 410 times 0.985. I think it would be easy to assume that it would be above 404. So you would look for a call option with a break even of 404 or below if you can find a decent price option. But I'm going to make this one off screen and post it to the premium Discord. Again, you can join that with the pin link going over to the premium Discord info tab. But let's see what we got going on. Let's see what these options are going for. If they're decently priced, obviously, like, you don't want to end up overpaying for an option. And if we set our expiration date for tomorrow, yeah, the premiums on these are way jacked up. So if you buy just an at the money 394 call, that's going for like 437. So that means your break even for that is already 398. So the markets are only expecting a roughly 1% move for tomorrow in CPI. I think that's going to be significantly more. So actually, I guess implied volatility isn't really yet baked into these prices, which is interesting. But I'm going to look for one that has decent leverage. Even the far out of the money calls, like if you buy something like a 400, is going for 181. So assuming that spot is going to be above 404, that has a little bit more than 2x leverage, right? So I would probably want to get more leverage out of it. Again, my target is 404. The 394 call is going for 4. So that means that there's like 2.5 leverage almost. Doesn't matter if you buy at the end of the day. I think that implied volatility is going to go up by the end of today. So the closer that you get to the event, the more traders are probably going to be looking into making an options trade on it. So I would buy it sooner rather than later. But that's just me. That's my thought process. Let's see. So my price target again is 404. So I'm gonna find a decent option. Hopefully, the 399 call now is going for 207. So that's actually offering 2.5 leverage, and you're only spending 200. This one I don't want to put a lot of money down. And the reason for that being that this is a binary event, right? So if I'm wrong on CPI coming down by 10% tomorrow, like PPI ended up doing, then, like I said, the markets are either likely to trade flat or come down. But if it does come in at 7%, which is my expectations versus Wall Street expectations at 7.3%, that's when I think you get the 3 to 4% rally. So I think I'll open that. So I'll post this in the premium Discord. It's a little bit expensive, but I'm willing to risk maybe, $400 or $500. That's how much money I'm okay with losing if I'm wrong in this assumption. So I can only open a couple of them, unfortunately, but that's okay. And we're going to make some premium Discord members happy because this is a level 2 trade and not a level 3 trade, which I usually trade spread options, so hopefully y'all enjoy this. The bid ask just keeps moving around on me, making this harder to open. There we go. I think I can get in there. Sweet. Alright, let me take the screenshot. Post that over in the premium. Premium chats, please. Greg's trades. There we go. Okay. So this one's a new options alert. We'll see if we can close any other options while we're at it. New options alerts. Premium. Whoops. Alright. So that was a long call option that I bought. Let's see what I got for the price on it. Hopefully it was decent, but I can't tell. Oh, I can't even see what is on that. Gotta love Discord sometimes. And its lack of functionality. Alright. Yeah, so I got my limit order. Alright, so again, my analysis for that was expecting CPI at 7.0 versus Wall Street expectations at 7.3. Last time CPI came in 0.2 below expectations by rallied about 4%. I do think that that could be tempered by the Fed meeting on Wednesday. Possibly, people worried about what the Fed is going to do. So that might, reduce my expectations depending on how CPI comes in. But I think if it comes in at 7 versus 7.3, I think that's a really good beat, I guess, for inflation. But yeah, rallied about 4%. Gave myself about 1.5% margin of error. And again, not super confident on it because, again, this is a binary event. Could you shift your other screen so we could see the details of the trade? So that one's on the premium Discord. So we only have the opening trades on the premium Discord, and then whenever I close a trade, that will be posted to the that will be posted on here or live streamed on here. But let's see. So it was just a long call option, assuming that SPY would be above that 394 mark. Or, sorry, above the 404 mark. Deep in the money. Doesn't matter if you buy at the end of the day. Yeah, I think I already answered that, but yeah, all about implied volatility. I think implied volatility is going to rise, so you're going to pay more at the end of the day for that option than you will right now. Likely, at least. But let's see what else is going on. So SPY's trading at 393.80, basically no change since the open. And if we look at the SPY call, this one is the ones that I bought last week that y'all already know of, where I bought a 397 call and then sold a 398. So this is a call debit spread, assuming SPY is going to be above 398. I don't want to close this yet because I do think that it's going to work out. So I'll hold that for right now. And let's see what else we got going on in the market. There's a couple stocks that I have on my watch list for this week. So I have Oracle, which is reporting earnings today, but I don't want to trade it until tomorrow after I see the earnings and after I see how CPI comes out. Because, again, CPI is going to be very binary to where if it comes in at expectations, we're going to see a decent sell-off. But if it comes in to my expectations, then we're going to probably go up a lot. So, but if we do have bad CPI data coming in at expectations and then we have the Fed meeting, I would expect a pretty brutal sell-off. So I would prepare for that too. So a decent sell-off probably Wednesday and Thursday based on the Fed report. So not only are you getting the rate hike, you're also getting the summary of economic projections where they give the terminal rate or where they expect interest rates to be in the long term. And then they have the peak rate for 2023 is likely when they're going to peak on interest rates. So if both of those go up significantly more than what expectations are, then the markets are going to sell off pretty brutally on that. So a nice little tool that you can look at for this is FOMC Countdown. I'm going to link this in the chat for everybody. Let's see. So, let me turn off dark mode because it makes everything look like crap on this website at least. Well, it's still on dark mode, but anyway. So there's a 77% chance that they do a 75 basis point rate hike and a 23% chance that they do a 50 basis point rate hike. So the odds are definitely in favor of the 50 basis point rate hike, but if the Fed does decide to go against this would be the first time in about 60 to 80 years. So that would be a very brutal event to where we'll probably see a circuit breaker where the markets fall by more than 7% in a single day. Given that it is at the end of the day at 2 o'clock, we might not get that 7% the first day, but I do think if they go with the 75 when the markets expect 50, then we'll get that circuit breaker day on Thursday is what I would expect. But that's if the Fed goes against the Fed futures, and again, they haven't done that in 60 to 80 years, so the likelihood of that happening is like 2%. So obviously don't put a lot of weight into a trade like this. I already have like $200 or $300 on the line for it. How will the market react if CPI comes in at 7.5? That would be I would think that would be a pretty brutal sell-off because, yes, it is down from last month, but it's not what Wall Street expected, like the huge drop in inflation. I think that it would be harder to pitch the idea of peak inflation if we came in at 7.5 versus if we came in as low as 7. Right. So that's kind of my thinking about it. Looks like the SPY calls that I bought are already up a tad. SPY is rallying a little bit to 394.50. Those contracts are up by 60 right now. So, again, I spent just like $400 on it. Not a lot. So it's like a 14% return so far. Um, but yeah, so what I wanted to look at was the more long-term rates. So when rates are going to peak is likely going to be in June of next year, so June of 2023. And so the CME Fed Watch tool estimates this. The highest one is 37.3%, and that is for a 5% to 5.25% rate. Now, I do think that there's a possibility that this goes as high as probably 5.5 to 6%. But we would have to look at the summary of economic projections from the last meeting. So that was from September. So we go to Fed meetings calendar. Looks like we got rejected by that 394.57 mark. I don't know if I'll make any day trades today. We'll see if I have enough time for it. But we want to look for the September meeting, the projection materials, the PDF. So I'll link this one in the comments as well. So that is the monetary policy FOMC summary of economic projections, and it looks like dark mode is screwing us over once more. So let me turn off my dark mode. There we go. All right. So last time that they did a SEP, or summary of economic projections, they were estimating peak rate in June of 2023. Oh, sorry, no. The end of 2023, between 4.4 and 4.9%. Now, given the last couple months of inflation coming down, I do think that there's a likelihood that they don't go up as much, but I think that the Fed Watch tool might actually be right on this. I think that probably between 5 and 5.5% is what is most likely. So that would be a decent jump, and the bottom end of that range would turn into the top end of the previous range. And then the odds of 550 or 5.5% is 14.7. So that would likely jump from 14.7, I would think, up to like 20% if I had to guess. But that would be a pretty significant change, and that would likely cause the markets to sell off. So this is a summary of economic projections, and this is releasing tomorrow. This is the last release they had in September of 2022. So last time they released this, they were expecting 4.4 to 4.9% at the end of next year, and I think this can move to 5 to 5.5%, possibly. Depends on really the doves. So there's doves and there's hawks. The doves are more lenient on interest rate hikes, and then the hawks are more aggressive with interest rate hikes. So if you're taking someone like Bullard versus Brainerd, Brainerd is probably going to want less interest rate hikes, but Bullard is one of the most hawkish, so they're going to want more interest rate hikes. So they're going to be at the top, like the 4.9 from last time, and then Brainerd would be 4.4% basically. So we'll see what the range is. Again, I expect 5 to 5.5%, but I do have a little bit of bias there. I do think that interest rates should probably head all the way up to like 6% or higher above the inflation rate, at least above the core PCE rate, just to get rid of inflation. But I feel like they just keep putting it off and putting it off. But we'll see. We'll see who's right in the end. If they do manage to get inflation down, I would think that it's probably on the tailwinds of technology creating innovation and more production. I don't think that our current workforce is very productive in like distributing and creating goods. We've relied a lot on other countries, and with, you know, the tensions in China and the Eastern world at this point, doesn't seem like production is going to get better unless we have a lot of innovation in our production lines. So, anyway. And then again, I had Oracle on the watch list for this week. They're reporting earnings today. I'm not going to trade it until tomorrow. And then I have Adobe earnings, so I'll probably trade that tomorrow because I'm expecting inflation to be good, send the market up, so that's going to bring Adobe up with it. So I'm probably going to take on a short position for Adobe, assuming that it's going to come down. And then Oracle, I think it's either going to trade flat or come down depending on their earnings. So given that they're in the tech sector, I think that they are probably going to miss earnings. A lot of tech companies right now are missing earnings. But I also think that there's a decent chance that they meet earnings expectations, and then they're just going to trade flat with the rest of the market based on CPI rallying the market and then giving that up on the Wednesday Fed meeting. So I'm probably going to trade Oracle tomorrow and then Adobe for tomorrow as well, is the plans for right now. But if y'all can visit the Discord and fill out this survey, that would be great. So I'm trying to see what broker most people use. I'm trying to develop an app right now where I need to connect to different brokerages. So if y'all could go in and fill this bad boy out. Looks like most people use Robinhood, Interactive Brokers, and then other. So, yeah, if y'all could help me out there in creating a very useful options trading app that I'm working on, then that would be much appreciated. But, yeah, SPY's going up this morning pretty decently. So far the trend looks pretty flat, I would say. I would think probably going to go up in anticipation of the CPI tomorrow. So I would be either neutral or I would be bullish for today. And I would probably say, sorry for the voice crack. That's embarrassing. I'd probably say that we're going to stay above 393, so that's going to be my trade. So it's going to be a put credit spread, which is a bullish to neutral strategy, and my assumption is that we're going to stay above 393. So we'll see how much credit that gets first. That's the most important thing, the risk-reward ratio. Like if the RR ratio or the risk-reward is terrible, then not worth the trade. But let's see it. Does look like we might pass up that 394.57 mark, but we could end up getting rejected by it. Stock market can go any way possible. It'll always go to the right, though. So these spreads are paying a decent credit. I would say I'm fairly confident in it. But I would want to close it if it goes below 393.6. So that, I think, would confirm that we're going to be bearish. So I'm going to create an alert at or below 393.6. And it looks like we're about to cross that 394.57. Already did. And now these contracts are dropping in value and giving us less credit. But that's okay. That kind of confirms my bullishness. I think this trade is worth around 600 if I had to guess. So I'm going to open. Yep, there we go. All right. So again, put credit spread assuming that we're going to be above 393. Going to cut losses if we go below 393.6. But let me post this in the premium Discord's trade alerts and check on the other trades that we've got open. New options alert. Premium. Just opened a new put credit spread. And that one's going to be a day trade, obviously. It expires today. Day trade. And since this one is a spread option, I will actually take the screenshot over on Robinhood so people know which ones to buy, which ones to sell, because I know credit spreads can be a little bit of a tricky strategy, especially if you're used to level 2 options and just buying options or selling options. So a credit spread or any kind of spread is just the combination of both buying an option and selling an option. So that reduces the amount of money that you need in order to put up on the trade, especially if you're just selling an option. Like if I sold just a 393 put, I would need enough money to buy 100 shares of SPY at 393, which would cost me like almost $40,000. And my account is $30,000, so obviously can't afford that. But yeah, let me type in the details. Markets looking bullish ahead of CPI tomorrow, but sold off this morning to 393.41. On open this morning to 393.41. I think we will hold the 393.6 price level unless there's any bad news that comes out today. So planning to close this if SPY goes below 393.6 or if bad news comes out later today. So there we go. Let's see what else we got going on. So that trade is down right now by 120, about 20%. But I do think that as long as we hold above that 393.6 level, this trade is in the bag. So the SPY calls that we had open this morning, first thing this morning, currently up 15%. So those are doing pretty well. Again, I don't want to close those just yet. Probably not until CPI comes out tomorrow morning, after CPI comes out tomorrow morning. But yeah, let's see what else we can find, if there's anything else that's worthy in the market. So UVXY is at 783. UVXY is still trading pretty high. I do have UVXY shares that I bought, which I will show. So I have 500 UVXY shares that I ended up buying for, let's see, what price? A price of average price, I should say, of 765. So right now for these, I'm up 2%, but I do think Wednesday volatility is likely to tick up, so it's likely to come down tomorrow because of the CPI. That's going to be one major volatility event out of the way. So I think I might actually reduce this position, maybe by half. So I'm going to sell 250 shares at the current price at 784. So this is going to be a sell alert that I'll post over in the Discord. So I just sold 250 shares at $784 a piece for a total of $1,960.50 of credit. post this again in the trade alerts. So this is a sell alert. Premium 101 freemium. Just sold 250 shares UVIXI at 784 each. Whoops, each. All right. So again, got a total of 1960 in credit, and my reason for selling that was because I think that, and not inflation. I think that inflation report tomorrow is going to bring down implied volatility. Just based on my analysis of CPI coming in much lower than expectations. So I would rather reduce that position than hold the full 500 shares going into what's likely to be a killer for volatility. The VIX itself is trading at, 24.45 right now. That is a huge gap up. I'm surprised that UVIXI isn't trading much higher, given that the VIX gapped up by like 10%. That seems a little bit broken. Doesn't seem right at all that UVIXI wouldn't go up, even though the VIX jumped 10%. That's really crazy. Is there any other? VXX didn't go up either. That's really trash, honestly. Because the thing is, when it comes to the VIX itself isn't tradable unless you buy futures options, I think. So if you type in VX, even the futures didn't gap up like the VIX did. And the VIX, again, isn't tradable. So it's kind of screwed up that none of like the trade ways that you could trade the VIX, like UVIXI or futures, none of those went up, but the VIX itself went up freaking 10%. That's weird. That's weird is all I can say. Seems a little manipulative, but just gotta deal with the cards that the dealer gives us. But yeah, let's go back to SPY. Trading at 394.50, so still above that 393, well above the 393.6 mark. So I think that trade should be doing pretty well. It should be recovering from the 20% drop that I saw initially. Yeah, it's only down by 10% now, so decent trade idea. I think that it's going to pay off by the end of the day, just given the optimism ahead of CPI, but markets might start to worry about the Fed meeting. I would think that would come later on, but we'll see. Let's check what other news is coming out. So we have the Biden administration says U.S. and Chinese, well, the heck, discuss areas of possible cooperation, including climate change, health security, global macroeconomic stability, and global food security. Yes, because the governments have done so well in providing all of that so far. Right. White House says U.S. officials met with China's vice foreign minister in China on Sunday and Monday. So a lot of White House talks so far this morning. Let's check out investing.com. See what news is coming through there. Stocks rise, awaiting inflation data and the Fed's rate decision. So I think that there's a high likelihood that we get the 50 basis point rate hike. So likely going to head up on anticipation of that and lower inflation tomorrow. So I think the bullish neutral trade is going to be fine based on the headlines that I'm seeing so far. Crude oil higher, rebounding after last week's recession-related sell-off. Okay. So that's kind of a good sign for the markets if they're not expecting, if the recession theme is gone now. Amgen secures $1 billion deal, $2.3 billion deal. Goldman upgrades Best Buy, cuts Restoration Hardware, and Ulta on challenging 2023 outlook. Interesting. So Ulta fell a decent amount last week already, so given that they got downgraded, they're probably going to sell off a little bit more. I don't really rely too much on Wall Street analysts because they're just as good at predicting if a stock is going to go up or down just as much as you or me. So I wouldn't put much weight on it, but obviously it does have some impact on the people that do believe in Wall Street analysts. So they did end up selling off 0.5% while the rest of the market's going up today. But let's see. So that's Ulta. They fell on their earnings report last week. I made a decent chunk of money on that. Looks like the put credit spreads are... no, they're actually down 20% again because SPY's fallen to 394.25. This is not working. SPY. But still well above 393.6, and I think it's just finding a balance at that 394.57 mark for right now. And then the next price level that I have is at 395.14. You could probably draw one right here, actually. This would be a candle of significance, so you take the open, close, and then divide that by 2. I think the 395.14 mark is close enough, so we don't have to draw that up right now. But then the next mark is going to be 395.71, 395.95, 396.35, and so on. So lots more price targets to the upside for today than we got for the downside. So overall, feeling pretty bullish, or at least neutral. But we'll see how the trading day unfolds. So far from the headlines, it looks bullish. Obviously, one headline could change everything in this market, but yeah. I don't know if I'll make any more trades today, but I guess we have about 15 minutes left, so I guess I could use this time. If y'all have any questions about options trading for me, or if you have stocks you want me to look at, basically any sort of questions, I'll be here for the next 15 minutes. I'll keep tabs on all the trades that I have open, see if anything is worth closing. But yeah, if y'all have any questions about options or stocks, let me know. Oh, and I see that we have 59 viewers and only 14 likes, so we're going to need some more likes in here. What about AMD going down? So I think AMD and pretty much every other chip maker is in a very sticky spot right now. Let me move this over, and we'll do a little bit of analysis. I'm not going to spend a lot of time analyzing each stock, otherwise I'm going to be here for the next 10 hours, but... if we look at AMD, currently it's trading at 68. The lowest that this stock has gone was 50, I think mid-50s if I remember right. Yeah, 54.7. I think their earnings per share is going to continue to decline. Now, the thing with AMD, though, is that they are a tech company. So what tech companies have kind of leveraged over the past few years is their stock buyback programs and their employee stock compensation programs. So those will actually make their earnings per share look better than it actually is. If you look at GAAP or standardized earnings versus non-GAAP, where they can include the share buybacks and they can include the stock compensation to reduce, basically, to actually improve their margins, basically. Then their earnings per share is going to keep coming in higher, and they can kind of manipulate that a little bit depending on how many shares they buy back and depending on stock compensation. They can manipulate that to meet the Wall Street expectations. But it is important to look at their GAAP versus their non-GAAP. So their GAAP earnings for last quarter was, I think, 67 cents. And then their non-GAAP earnings was like 6 cents. So obviously, huge discrepancy between GAAP and non-GAAP, and that's only going to get more apparent as interest rates are going up. Tech companies are very focused on growing, and growth costs a lot more money when interest rates are going higher. So that's my simple analysis for AMD. Currently trading at 68, the lowest was 55, and I think just based on declining earnings over probably the next couple of years, this stock is going to continue to decline. It gained a crap ton over the last 3 years, so it's got a lot to give back, right? It started at $9, went all the way up to $164, and now it's trading at 68. So the stock is still up sevenfold, almost eightfold over the past 4 years. Let's see. When did I get my start in trading? Eric asks. So I got started in trading back in 2016. But I didn't really focus too much on it because I was trying to get a computer science degree. So I was more focused on getting the CS degree and, finding a job, hopefully at a fintech company. So I didn't have a lot of time to dedicate to trading. And then March 2020 came around. I was tired of school at that point because with the education system, they don't teach you actually applicable skills. They'll teach you the theory and everything, which is great, but I actually got more learning out of internships and out of, developing websites than I was able to get out of the classes. So I ended up dropping out of college in March of 2020. So it's been about 2.5 years since I've been trading basically full time. So analyzing, trading, and practicing trading pretty much nonstop since March of 2020. Dropped out of my master's in psych. Yeah, I just feel like the current education system, it's not super applicable to the real world. But like I said, internships and developing my own websites was a lot more useful for my learning in CS than taking the courses on Java and C++, right? Which are old and antiquated languages versus Python and all the new ones that are coming up, React.js, stuff like that. But besides the point. Do we think that you think we should trade a strangle as it will swing dramatically? You could buy a strangle. Given that implied volatility is, rising with the VIX at 24 up from 22 last week, you are going to be paying more for that. But it wouldn't be a bad idea if you expect the markets to go really big one way or the other. My contingency with that would be, so tomorrow we're going to get the CPI likely to go up on good CPI data. I don't think that there's as much downside if we meet expectations. So I would be more levered to the upside than I would for the downside. And you can kind of manipulate it. So maybe you could have a 2-to-1 ratio for calls to puts or something like that. You could hedge basically the position by having a different amount of, separate options, calls or puts. Any tech stock that I'm long with, the only tech stock that I'm long with is Tesla. And the reason for that is because, the EV industry is basically in its infant stages, just social media and social media was in like 2012 to 2015, right? There's only like 2% market penetration right now in the United States. At least it's like 20% over in China. But very small market penetration for right now, and that is going to grow exponentially to where we're going to see an S curve, just like we saw for social media taking off around like 2015 to 2018, where basically everybody started flooding into social media. So because of that huge demand that we're going to see in probably the next 5 to 10 years, I am bullish for electric vehicles, and specifically for Tesla, because they have the best electric vehicles. They are, they've been making them for the longest amount of time at mass production. So I wouldn't want to, rely on somebody that's new to the market like Hyundai. I have thought about buying a Hyundai electric vehicle just because of the price of it, but I am worried about the reliability. I know that, Teslas all have their problems too, right? Like the panel gaps and, just other nuances, but those are less technical and those are more like aesthetic, and I'm not so much caring about the aesthetics, even, if I'm paying $60,000 for a vehicle. And that's kind of the caveat with Tesla too, is they are more expensive, but they are the brand for electric vehicles. So I am long Tesla. I do have, I think, I want to say 35 shares, 36 shares. So it's not a huge position. Like Tesla's trading at like 180 right now, right? So I only have, that's not right. I don't have 350 shares. I have 35. So I have about just 6,000, which is, my portfolio size is like 70,000 right now, so it's less than 10%. What do I think of Rivian? I like the Rivian trucks, and I like their product. But the problem with electric vehicles and pretty much any automaker is most of them have either gone bankrupt or they have merged with other companies, right? The only two that haven't are Tesla and Ford. I do think that there could be some exceptions going forward. I just don't know what companies those are going to be. You really need a manufacturer that's going to prove themselves, and I would be very hesitant to, buy a company like Rivian or Lucid Motors that's only been around for, 5 years versus like 10 years, where Tesla has been making hundreds of thousands of vehicles each year versus Rivian and Lucid only making, I don't know, like tens of thousands if I had to guess. I haven't looked at their production reports recently. I'm a little bullish in the Chinese market. What do you think of the Chinese? I mean, they're in a pretty rough recession. I do think that they could pivot, kind of like the Fed might pivot next year. I just don't really trust anything that comes out of China, just because of how controlling their government is, not only to their people, but how the world sees them. So I would avoid Chinese stocks, but that's just me. Do you think electric semis are possible? They keep talking it up. Tesla, yeah, so they ended up rolling out the Tesla Semi to Frito-Lay, I think it was, recently. I mean, the physics behind it is very difficult, right? Like, you have this huge freaking truck with a ginormous battery. I do think that there's going to be problems whenever it comes to, like, weight limits, right? Some roads have weight limits, so I don't know how they're going to get past that sort of regulation unless we build better infrastructure, better roads. But I do think, it is possible for the, electric semis to work. I mean, it's been done before. Like, Tesla's already done it. Nikola Motors. I know this is a shitty example, but Nikola Motors and Bosch have already done it. I think Volvo is working on their own electric vehicle or their own electric semi. So I do think it could work, but there are some contingencies whenever it comes to like weight limits on roads. The battery is going to drain a lot quicker because it's going to need a lot of energy to push, what is it, like 18,000 pounds that these semis carry. So, there are some negative aspects to it that could hold it back. But overall, like, they are working products. So you just kind of have to find a balance. Do you have any videos on trading earnings? I think so. Let me search that up for you right quick. I've got a catalog of like 150 videos, so I'm sure I have something on earnings. This is, all right, this one right here. So I'll copy and paste this one for you. All right, so we got about 4 more minutes left. Wow, y'all actually liked the video. 31 likes and 45 viewers. That's not too bad today. Thank you. But yeah, that's the earnings video. I usually trade earnings most of the time with either call debit spreads credit spreads or debit spreads, just because you don't have to deal with the headache of IV crush. But if the implied volatility is relatively low, if you look at IVP, which is a good study, this is a custom study that you have to make. You can just Google implied volatility percentile Thinkorswim code or something like that, and you can type in the code for it. But let's see. So Adobe earnings is coming up this week on Thursday, but the implied volatility is 95, right? So that means that implied volatility is in the 95th percentile, or extremely high compared to where it's been over the last year. So if you're buying options, you're going to be paying that much more premium, that much more for your options, versus if implied volatility was, say, at, like 60%. So I made a video on this comparing debit spreads and credit spreads, but you can also apply this to just long options or spread options. So if IVP, or implied volatility percentile, is below 86, that's generally an okay time to be buying either calls or put options, depending on which way you think the stock is going to go, right? So if you look at a bell curve, I think it's like 86.3 is on the far right side of the bell curve, past the first standard deviation from the middle. I kind of wish that I had a visualization of this. Let's see if I can pull it up. Bell curve. How long does this live run? Just a couple more minutes, 10:30. So if y'all have any last minute questions, let me know. But yeah, so basically past this first standard deviation, if it's below, so if it's below, I think 86.3, let's see, 100 minus 0.136 minus 0.5, right? No, minus 0.021 minus 0.001. That's not correct. This should be 1 minus these numbers. 84.2%. So as long as IVP is below 84.2%, it's an okay time to buy puts or call options, but above that, I would be using spread options because of the IV crush. But yeah, 10:29. So if you'll have any last minute questions for me, let me know. And if not, then I will be heading off and hopefully developing my app that I need. Yeah, no problem, Peter. Thanks for tuning in with me. Thanks, Martin and Aaron. Thank you, Donald. Appreciate y'all being here. Want to work with you on your app. Hit me up on Discord if you want to work with me on the app. So that's in the pinned comment. I'll link it again. Currently looking for developers. So if you know any, if you got any friends that are developers looking for a job right now, then I'd be happy to take them on. But go to that pinned comment with the Discord link, message me, and I'll get back to you. Do you think it's a good idea to trade VIX calls on long-term in case of volatility if it jumps, especially with CPI FOMC meeting? The problem with buying UVIXI calls is UVIXI is already a leveraged product. So they gain their leverage based on futures, which are also going to lose value over time. So if you look at the long-term chart for UVIXI, it is piss. So if you look at UVXY, let me get rid of the IV percentile. This is the weekly chart over the last 5 years. Like this has been headed down over the last 5 years, and it will continue to head down continuously because it's going to continue losing time value. Even if you look at the 1 year, this is headed down because the VIX itself is usually just range bound. It usually trades between 20 and 30. Sometimes you'll see it go above 30 like we did back here a few times, but for the most part it trades between 20 and 30, and since UVIXI is a leverage product based on time decaying products, it's going to continue to lose value. I do think that buying shares would be an okay idea if you have like a 3 to 4 week timeline. But past that, I probably wouldn't buy even UVIXI shares just because of that leverage, because of the time decay. Gonna jump on the Patreon next week. Thank you so much. Thank y'all for joining me, and I'm signing off. So catch y'all tomorrow at the same time, 9:30 in the morning. Bye, everybody.